commodity prices themselves are a bit softer generally, particularly gas prices. In terms of production, as signalled previously to the market, whilst we're waiting for our new projects to come online, there is some natural decline, but production has actually been quite strong through the first half. We've been able to maintain that production. I think production costs are a bit higher than the market would have anticipated, and really, as much as there's some inflationary pressures we're seeing coming through in those prices, a lot of the cost impact in the first half has been of a one-off nature, with severe weather events in particular across our Australian operations in the Cooper Basin and in Queensland impacting our production costs in the first half. We'd expect that to ease off in the second half, and as we drive some of the cost efficiencies across the business, see us start to cut some of that back. So yes, whilst the profits were down, the cash flow generation was strong. And I would describe the results as a solid set of results, with the base business delivering strong free cash flow, with significant progress on our major development projects, with Barossa now 80% complete, the Pikka project 60% complete, and our Moomba carbon capture and storage project in the sort of final commissioning stages of that project. And so overall, I would describe that as a strong set of results. And pleasingly, I think the board supports that with the declaration of a record interim dividend for our shareholders.
Has softness in the Chinese economy dampened demand? And if so, do you see that demand continuing to drop further into the second half?
Look, I think what we've seen in the first half and will continue to see in the second half is a lot of global volatility. We're seeing economies wrestle with inflation, austerity measures kicking in, demand has been suppressed a little bit, and I think ultimately we'll see more of that volatility through the second half of this year. We run our business on long-term forecasts and long-term positions in terms of the commodities that we are developing and selling. And I am very confident in the long-term demand for our products, particularly gas and LNG, which I think we have seen as the world is working out what the energy transition looks like and the time it's going to take to transition. We're seeing the role of gas strengthen, not only here in Australia, but globally. And ultimately, we're very focused, myopically focused, in fact, on delivering these projects. And what that should mean for Santos, Kirsten, is that we come out of this very high capital-intensive period that we've been going through for the last couple of years, and we start to become a much lower capital intensity business in the years ahead, which should lead to much stronger cash flows. Yeah.
Santos has 3 major projects nearing completion, as a wave of new international LNG projects are scheduled to come online later this year. Will there be continuing price weakness out into the medium term?
Well, by historical levels, I would suggest that the prices we're seeing today are relatively healthy and strong LNG prices. We're also seeing some of these projects slower to come to market. And so my view is that you'll see it finally balanced for a few years, probably through to the latter part of this decade. But ultimately, I see demand for gas strengthening. And as the economies pick up again, I think you'll see more of that demand for gas. And that'll not only be just for pure energy needs, but also for countries to meet their decarbonisation pathways. And so I think that'll be good for gas prices over the longer term.
What are the implications for Australian households in terms of prices? Will the extra projects coming online exert any downward pressure?
Well, unfortunately, supply is what is required. New supply is what is required. And so projects like the Narrabri gas project, which has been sort of navigating its way through approvals processes for 14 years now, are absolutely essential if we're going to drive domestic gas prices down on the east coast of Australia. So we're very committed to continuing to do that work. We've got some 24 people employed full-time in New South Wales progressing that project, trying to get our pipeline approvals for that. We cannot take FID on that project until we get those approvals. But ultimately, the lowest cost gas you're going to get in the system will be gas that's developed from under our own feet. It's not going to be imported gas because that is always subject to international prices. And so we're very committed to trying to develop those projects. Once we can, we will. And we believe that will bring the lowest cost gas into the market. And with the government's recent announcement of its future gas strategy, the demand for gas is now getting recognised at all levels of government in Australia. We just need to get these projects developed, get them online, and I think you'll see some of that pressure easing off.
Are you saying that domestic gas prices aren't influenced by international prices?
What I'm saying, there is a connection between the two because of that lack of supply in the market. But something like the Narrabri gas project is 100% dedicated to the domestic market. And so what I'm really saying is that if we want to decouple from those international prices, we have to get more local supply online. We have to have clarity around reservation policies to ensure that when we do develop new projects, there is an element of that gas dedicated to the domestic market. I've always been an advocate of gas reservation policy here in Australia. But without new supply, it doesn't matter what your reservation policy is. If there's no gas, there's no gas. And that will drive the price of the scarce commodity even higher. So what I'm saying is we just need more supply into the market. That will drive gas prices down. Otherwise, you will be completely exposed to international pricing.
The share price is down off the back of half-year results. Is Santos looking like an increasingly attractive acquisition target? And have you had some contact from either Saudi Arabia's Aramco or Abu Dhabi National Oil Company?
Well, Kirsten, good try. I'm not going to jump at that one and add to the speculation. I think what I will say, though, is in my 8.5 years in this role, there's been a few attempts, if you like, and approaches over the years. As a CEO, you must always be open to any avenue to realise the value for your shareholders. I think the speculation just really is a recognition of the fact that we have a very attractive LNG portfolio, some of the strongest LNG pricing contracts globally, 3 world-class assets, very close to market, which provides a very significant Scope 3 shipping emissions competitive advantage. And so that in itself would drive speculation. If it happens, it happens. In the meantime, my message to my management team is you stay focused on delivering, because we will deliver significant value to our shareholders when we deliver these projects and deliver our development plans.
If Santos is picked up by a foreign buyer, should Australians be concerned about their energy security? Is there anything stopping an overseas buyer from exporting most, if not all, of Santos's production?
Look, I can't comment. Again, I'm not going to add to that speculation. What I would say when it comes to energy security, though, is Australia plays a large part in the energy security for our region. We have done now for 40-odd years by providing reliable supply of LNG to Japan, to Korea and other Asian partnering countries. And I think we are recognising our role, a very essential role in providing energy security to our region. However, we have to also provide energy security to our domestic users, to our domestic buyers, to the homes that still require gas here in Australia. And the best way to do that, always the best way to do that, is to unlock new supply. And so my message has always been that we need to get alignment at all levels of government and the regulators to help get the gas developments up and running so that we can do that. And that will provide the lowest energy prices that we can get here in Australia.
There has been some criticism of the government's gas policy. Is it a distraction from the renewables transition?
Look, I think it's fair to say that all governments globally have wrestled with an enormous task. I mean, it's the biggest task probably since World War II to get our heads around how the world is going to transition. Every country, every region will have a different solution, a different pathway to whatever their net zero or equivalent looks like. However, I think as we go along, the one thing I'm seeing commonly develop worldwide is an understanding that gas is a critical part of that solution. There is no net zero without gas as part of that solution. The countries that have been most successful in decarbonising their economies have largely done that by switching from coal to gas. And so gas is going to be a big part of the energy mix for decades to come, beyond 2050. And I think as governments are wrestling with that and developing their policies, hopefully we'll see a period of stability. We can build that confidence in Australia as a place to invest. I welcome any investment in Australia. And from that, I think we'll be able to develop our fields and continue our role in this region as a supplier of reliable energy, both domestically and to our Asian partners.
Kevin Gallagher, thank you.
Thank you very much.